Hello, everyone, and welcome to today's Friday session here at XM Live. Today's session's topic is going to be entry and exit strategies. Extremely important. So, I hope you guys are joining me here from YouTube, or I hope you're here as well through XM Live, of course. And I would like to share with you my strategies that I use for entries and exits, what is important in my opinion, why do I use this strategy, how everything, came to this point to develop these strategies. So you understand a little bit more, because it's not only about, charts and entries and exits, but a lot of times it's also about why is this happening this way and why does it make sense to be this way. So everything that we're doing, I'm sharing with you my experience. And if you want to take parts of it, use it as your own or modify it, of course, you can do that at any time. But you need to understand the background. Why is it happening like that? I see here viewers in our chat. Boyki is here. Nedelka is here. Hi, Nedelka. Nice to see you as well. Yes, I am feeling good. Thank you so much. How are you doing? Nice to see you. And we're going to continue here, guys. So first of all, why is technical analysis important? It is important to identify the best entries and exits for a trade. And we're trying always, when we're making a trade, to make good trades with very, very good risk versus reward. So if you have a chart in front of you and you don't see a good risk versus reward, that means you don't have a trade. At least this is how I'm treating these charts. So for me, the chart must be perfect in order for me to take the risk and say, yes, I want to go long or short, whatever the direction I want to go. And this is where, I want to go with this whole strategy. If it's not happening, I will have to wait until something better shows off or something better occurs, maybe go to another chart. And so that's why it's important to figure out basically good risk versus reward. And remember, in trading, we're always talking about probabilities, like what is most likely to happen if you do one thing and what is most likely to happen based on the chart. That's why I'm talking so much about these market cycles, because this is extremely important to understand. If you're able to understand the market cycles, you should, you have, let's say, half of the battle almost uh, done and gone, because this is very crucial part. So that's like the fundamentals. When you're building a house, that's the fundamentals. If you don't have it, you can't really build a house. So, and again, that's why technical analysis is important, to identify the best entries and exits on the chart. But that comes, like I said, second. So when we're talking about entries and exits, yes, they're very important, but it's not just candlesticks or trends on the chart. It is more than that. It is understanding the bigger picture and trying to figure out where is a good place to enter based on the bigger picture, for example. Okay, let's go ahead and continue here. So, as of my style, I like to keep everything super simple, or the like I calling it simple and stupid. I want to have less indicators on the chart, and I don't have usually many indicators. And I personally think indicators are lagging. They're representing the past, and if you're trying to use too many of them, it's not really going you're trading. They're the past, so they're lagging, they're not showing you the future. And second of all, too many of these can actually confuse you more instead of give you clarity. So that's very, very important to understand. We're looking at important price levels on the chart, which are support and resistance. And based on these levels, I use the candlestick to identify the best entries and exits on the chart. So that's important to understand. As of my trading process, I have a very specific process, and I call it the top-down approach. So I start with the very big picture. Like I mentioned, what is the current cycle? Are we in an uptrending cycle, in a distribution cycle, in a downtrending cycle, or in an accumulation cycle? So when you open up the chart, you need to be able to figure that out and tell where you are at. If you're not able to do this, you have to try to study that and understand these things. From there, I'm trying to figure out what is making the most sense here to do next. For example, if we're at the very, very last stage of an uptrending cycle, and for me, the chart looks very, very extended, it's not going to make much sense for me to try to, buy breakouts or in general buy the dips. That's because it went so much already, and there is no more, no more meat on the bone, no more, no more just momentum in the chart to get going. That's why I would actually prefer to rather either wait for a pullback, for deeper pullback, or trade the short side, which we're going to discuss in a second based on my chart. Okay, so that's the overall bigger picture, and then from there I'm drawing researching for, in my case, because I'm trading mainly stocks, I'm looking at strong sectors. For example, what sector is moving very good right now? AI? Is it AI? Is it tech? Normally I trade most of the time like 90% actually tech and tech stocks, because they have been very, very uh, volatile and hot, and also they have pretty decent moves and trends, and this for me in both directions a good way to choose. So either in on the long side or even on the short side, you can capture pretty decent moves because they're very volatile. And so in these sectors, normally I'm looking for growth stocks, but now my style changed a little bit. So now I'm more into, I have these 5 or 6 stocks that I'm watching, and including, of course, the overall market. And when something happens on the chart, I just go with it. And I have 5 or 6 stocks, main stocks, that I'm watching, and I don't look too much into different fundamentals. That's because I know that the stocks that I'm looking at, they are growth stocks. They have enough volatility, so I can take enough out of them. Now, occasionally I might find some cheaper stock, something that is not, so um, famous stocks that are not very, very popular, not a big beta stock. But in general, I'm gonna stick with something like Nvidia, AMD, these standard stocks that I have pretty good volatility and that are good to trade. So if you're not a stock picker, this same strategy can apply for other instruments as well. For example, you can, instead of looking for individual stocks or sectors, if you're trading currencies, you can basically look at the overall cycles and decide which direction do you want to pick and just go with it. You're just skipping the whole sectors process because there are no sectors there. Then I'm drawing, of course, the support and resistance areas on the chart. That's very important. And identifying from there good entries and exits with good risk management. Now, for those of you that don't know, because we're here in the beginner's room, what is a trend? An uptrend has higher highs, higher lows, strong moves to the upside, and very short and unclean pullbacks or corrective moves to the downside. The opposite is a downtrend, lower lows, lower highs, a lot of momentum on the big candles down, and short and weak pullbacks. So very important to understand. This is how it looks like. We're gonna go on the charts, guys, as well. So I'm gonna discuss everything live on the charts with examples. This is just a little intro here for you, for those of you that are new. And I see here N is here in the chat, and Miriam, welcome guys to this session. And Miriam, thank you for joining. So this is a downtrend. What's important to understand, though, is the price action. That's what we're looking at, and extremely important to pay attention to in general. How big are the candles in the direction that you're trading? Are they like just small corrective moves, or do you have like big green candles to the upside? This means momentum is shifting there, or it is already in this trending direction. This is going to tell you also who is in control, bulls or bears. Even if you are in a downtrend and you start seeing accumulation with big green candles, this is going to tell you that we might shift from an accumulation phase to an uptrending phase. And when this happens, you need to be able to of course, recognize it and be one of the first that is going into the trend direction and catching the whole move to the upside. Okay, and so to finalize that, support and resistance on the chart act as barriers, preventing the price of a stock or any other instrument getting pushed in a certain direction. And many technical analysts use support and resistance as well. Now, personally, guys, I don't use trend like trending lines or these trend lines, what some people are drawing. The reason for that is that anyone can pull, connect two lines together, and you don't know which lines are actually the right ones to connect everyone. If I tell each of you, please draw me a trend line on this chart, I'm sure I'm going to find at least 5 or 10 different versions. And because that is so unclear for me, it doesn't really make sense to use that as a strategy for myself to these trend lines. Support and resistance are very clear. This is always the previous low in the chart in the breakout zone. That's your support. And the resistance is the previous high on the chart or the breakout zone on the chart to the downside as well. So this is how it looks like once we break through resistance. This becomes support, and then the previous highs are resistance. When it breaks through that, it becomes support, and so forth. Support and resistance can be also in a sideways price action, where you just have like in an accumulation phase, just a sideways price action, the resistance zone, the high, and the low. Or in a downtrend, you see those big moves to the downside, lower lows, lower highs. In this case, this was support. Once it's broken, it becomes resistance, and we're looking for entries around the resistance areas on the short side. Now, the next step, what happens here once we identify the big picture, the support and the resistance, and the sectors that we're going to trade, what I'm looking at the most are the candlesticks. Candlesticks are extremely important on the daily chart because they are giving you already the information what's going on. They are giving you who is in control. You can see a lot based on the candlestick. That's why for me, that's one of the main things that I'm looking at when it comes to entries and exits and what I'm using. And again, this is happening on the daily chart. On the lower time frame, we have more noise on the chart, guys. On the lower time frame, you have a lot of up and down, a lot of upside down price action, breaking of support and resistance. You're going to get stopped out much more frequently compared to the daily time frame, because the daily time frame is just much more clean. It gives you better direction, clear direction, and you kind of know very quickly where you are at. Okay, Sidra is here. Welcome, Sidra, to the session. Can you check gold? Yes, let's check gold before we continue with the candlesticks real quick, and we can go from there. Gold, let's see. Gold has been in a pretty decent area here for long, actually. I took actually this piece here. That was a nice move up. So this was up, and then it started to go low, and I didn't touch it on the short side or long side. But now actually starts to look very interesting. Sidra, thank you for bringing this up, because that's here the support zone. And at the same time, we have here this green line, which is the 200 moving average, which I think it is important because the 200 moving average represents the last 200 candles on the daily charts. That's the last 200 days, the average price. And that's a pretty good support zone as well. It acts as support. So now I like it for long, but I want to see first how it closes. And guys, for those of you that joined yesterday, remember I've been discussing my trade on the US 100, and I told you you have to wait how it closes. It looked so bullish yesterday morning, but it turned around and it just closed down again. So it's a huge difference between what you see now and what you're going to see at the end of the trading day. And I just want to show you the same exact thing here on the US 100, Sidra, so you understand what I'm talking about. Yesterday, at some point, it looked so bullish. I've been thinking to close my short, and it almost, I just have my mental stop, which was here. And I thought if it closes here above and starts to continue pushing higher, I have to close this trade. But I also told you guys, if it reverses, it depends on the close. If it reverses, I want to give it some minutes, see how it goes. But if it reverses, I'm just gonna leave it.